Hey guys, the topic of this video is going to be the very highly requested how to enter a trade, how to time entering a trade. We've all seen really great trades that have run for quite a bit, but we didn't enter at the right time. Either we missed it or we entered at the wrong time and didn't get a good result. And that could be really disheartening when you see something run for a high percentage and then you don't get a good result. Maybe you get stopped out. We're going to use Uber here, which ran for 170%. And I want to use this as a good example because there are going to be a few things that actually surprise you. So before we get started, just a quick reminder that the basis for this trade, and I'm going to put a lot of this on the screen, I'm going to show you my callouts, show you the results, as you can see, as well as the basis for the trade. A key point of data comes from unusual whales. We use the options flow via unusual whales to help us understand what whales are doing, and that provides conviction to our trades. So let's get right into it. Now, as I said, this is going to be a series of videos because I think seeing different use case scenarios is extremely helpful. Seeing one trade, not all trades look alike, right? So seeing one trade will only do so much for you. So let's take a look here and see where we could have entered. Of course, 42.65 was our trigger price. And we get an opportunity to enter really at the open. That's not for everybody. Take a look at my live videos. I explain who should be trading at the open, who should be considering it, and how to trade at the open if you're someone that's apprehensive or considering it. But let's take a look here. Obviously, if you entered at the open, you have a really good run up here. I think that you might have started to scale out on the pullback from this point, as you can see. So yes, I know we do ultimately make a really big run and you could have had a massive return. But if you're practicing disciplined trading, you can start taking some profits off the table. Now, whether you use a trailing stop and exit your entire position for a really great gain, this is about 50%, or whether you take some size off and let it run. I think if you let it run, you probably would have taken more size off here and ultimately likely been out by here. Now, if you really kept your size on and were high conviction, as I noted, I think everybody starts clearing out here because you've hit this peak and it's such a fast pullback. You have zero reason or business holding on to this point. Now the fake gurus are going to tell you they took the trade and they got out here. And here's why that doesn't make sense. And part of what I want to do on this channel is help you understand how to tune out the bad information and noise, because it puts pressure on us and forces us to make bad trades when we don't do that. What do I mean by that? So let's take a look at it. If you held to this point and you kept holding, and for some reason you held all the way here, right? And you're thinking, I need to be like one of these fake gurus who call out trades that I know they don't even take. You're going to still hold here. And then you're going to suffer an enormous loss. This takes about 40% of your profits away. You have no business doing that. And if you kept holding, you could actually end up in a losing position. It doesn't make sense. Taking profits is extremely important. Now let's get to some of the more nuanced items here. And what I'm going to tell you might kind of blow your mind. You can have a good entry and still not get the right result or the result that you're looking for. And we'll touch on that in a moment. But first thing here, as you saw this breakdown, I tweeted out, and when I get an opportunity, I do. I don't always get an opportunity because, of course, I'm managing my own trades, and I wouldn't be a disciplined, good trader if I didn't focus on what I was doing to the best of my ability. But I was able to call out. I provided a caution for anybody who hadn't entered earlier to watch for falling knives. What do I mean by that? You're seeing a really fast, heavy breakdown. I don't like re-entry here. Now, what would have happened? You would have made a little move up, pulled back. You might have just gotten stopped out because the IV is so strong that there's an opportunity to get stopped out. Now, after you let it settle, could you have entered here? This is a possible entry point. You probably would have taken profit with about 20%, which is right around here. You start moving your stops up if you hold, and then you would have stopped out, well, right around here. Now, it doesn't quite hit our break-even point, so you should be taking profits. But I want to move over to a different point here. So here, there's some opportunities to take smaller profits, 15, 20% on some of these re-entries and bounces. Again, I don't like it here. Even though you might look here and say, I would have gotten an even better discount. I could have entered there. Breakdowns like this that are so sharp, I'm not a fan. Like I say, don't try to catch a falling knife. And again, look, you have another opportunity here. And if you don't get another opportunity, don't sweat it. Don't chase it. Don't play it like it's a casino and you need to get in a trade. That's how people get burned. We want to protect our capital and then grow it. So let's move along here. Here's some interesting points where later in the day, you would have opportunities to enter here. And this would have been about 15%. So you actually would have been stopped out. Now, would this have been a good entry? My take is that we've already seen Uber, sorry, we're playing Snapchat today. We've already seen Uber make a move, so I'm not crazy about an entry later in the day after such a strong sustained move. The smart money got what it wanted. But if we're just ignoring the move that's already been made, if you just saw this in isolation and this was earlier in the day, would I say that this is a good move? Well, right here, I don't like it. Why? Because really sharp move, we haven't let it consolidate. But as we do let it consolidate, would this be an okay entry? It actually would, in my opinion, because we've allowed it to consolidate. We see a break. We're right under. Even if you got in here, you're not stopped out. You're not taking profits because you don't see a big enough move. But you're just sort of going up and down. At this point, I don't think you would have had 20%. I took a look back. It was about 18%. Most of us are looking for at least a 20% return. So I think what would have happened here is you would have been stopped out. Now, why is that? Would that have been stopped out for a loss? No, because this isn't enough to constitute a loss. You would have been stopped out because in a disciplined trade, at this point, you're over 15% ahead, but you're not quite at your profit target. Move your stop losses up to 0, right? Once you're ahead, you do not let a green trade turn red. And I don't mean when you're 1% ahead. You don't move your stops up because you need to give your trade some room to breathe. But at this point, you're about 15% ahead. You're not quite at your profits. You want to let your trade run, and then you see a big pullback. If we get back to break even, I exit that trade because there's no way that I'm allowing for myself to take a loss on something that was ahead 15% plus. If I do, that's more of an advanced trade. I might have higher conviction. I may be building a position, but this is not a good way to practice and grow your account. And of course, you would have stopped out here, and then we see a bigger breakdown. Do I like to play towards the end of the day? I don't really like to trade towards the end of the day. High volatility. It's like the opening range. I don't find it to provide as much value. And of course, again, we were looking for a move up. You got to move up. It was a sustained move up. So we know that the whales who were involved in this for the basis of our trade, they had an opportunity to get their play. And if they were ahead, this is plenty of time and quite a bit of volume to divest their positions and take profits, right? So we don't want to be riding for no reason. Now, had this pulled back and had we stayed below and then seen a breakup, I might be more inclined to say, yeah, you could take an end of the day trade and practice good trade management with good exit strategies and entries, but not as much here. So I talk about this a lot and I say it's nuanced. What do I mean by that? I mean that there's no blanket answers, and that's what I don't like hearing from all these fakes and gurus, because somebody who doesn't understand something well memorizes a few lines, tries to say them confidently, but can't speak to the nuance, can't speak to the depth of a situation or a subject. That's what you get with a lot of the fakes here. So strong move up. There's a lot of profit taking here. This was a great place. And again, I'm saying that here we had a bit of consolidation. It wouldn't have been as bad a move to make an entry here, right? Probably stop out, break even. Here, you have some profit taking opportunities if you're able to hold. I think once you get up to 20%, you see this kind of pullback. I would like to see people scale out or use a trailing stop. So maybe this was about 23%. You come back down to about 15%. You scale out if you didn't take your profits, make a move back up if you're holding, and then you're out here. You don't suffer that loss. But are there re-entry opportunities? Yes. Is it true that sometimes, like here, you'll enter and you get stopped out at your break even? Yeah, that can happen. And if you held, which you shouldn't have because you were ahead, you could have even gone negative. Does that make that a bad entry? No. And that's one thing that I want to do is I want to separate bad entries versus good entries. A good entry doesn't guarantee that you will get the right result, the result that you're seeking. But if you apply them consistently more often than not, you will end up in a much better position. A bad entry will burn you far more frequently, and we want this to be wealth accumulation over the years as opposed to just YOLO trading. So that's our example with Uber. I put some screens on here. If you're interested in signing up to Unusual Whales, just a note, it is December 30th. Unusual Whales will be raising their prices 10%. So if you sign up today, I have a coupon code. I'm going to make that visible for everybody. You get 5% off, plus you lock in before the 10% price increase, so it's effectively 15%. Please leave me your comments and questions on videos you'd like to see in the future. I'll continue to do more lives and break things down for you guys. Thank you all for the support. My Twitter handle is ProfitsTaken for those of you who want to follow for the daily callouts. Thanks again, guys.